Hello and welcome back to Investing for Generations, your channel for high quality stock research for long-term value investors. And today I want to go through with you the Q3 earnings of JKHY, one of the positions in my portfolio. And it's not totally right because it was the end of the Q3, but for JKHY and their fiscal year was a Q1, so don't be confused by that. And JKHY reported first quarter fiscal 2021 earnings of $1.19 per share, which surpassed the SEC's consensus estimate by 11.2%. Further, the bottom line inched up 2.6% from the year-ago quarter and also rose 48.7% from the previous quarter. Also, revenues improved 3% year-over-year. Moreover, the company's non-GAAP revenues were $445.9 million, up 5% on a year-over-year basis. And with these numbers, JKHY stock has returned 11.5% in the year-to-date period compared with the industry rally of 10.4%. So even if the stock came back in the last few months, they still outperformed their industry. Also interesting, as always with these reported numbers, is the guidance. And for fiscal 2021, the company projects GAAP revenues between $1.76 billion and $1.77 billion. Notably, the company raised the lower end of the guided range, which previously stood at $1.75 billion. The SEC's consensus estimate for revenues is also projected at $1.75 billion. The company narrowed the guided range for year-over-year growth in its non-GAAP revenues from 5.5 to 6.5% to 6 to 6.5%. Further, the company upped the earnings per share outlook for fiscal 2021 to $3.75 to $3.80 from the range of $3.70 to $3.75. The SEC's consensus estimates for the same is pegged at $3.73 per share. So that's the reported numbers and the guidance, and I think overall these are very, very solid numbers for JKHY in still very difficult circumstances for the whole economy. And when they published their Q1 earnings, first of all, the stock dropped on Thursday, but then recovered yesterday a little bit to now $157 or a market capitalization of around $12 billion with a P/E ratio of 40, which is still not cheap. And so the question becomes, what will I do with this reported numbers and what will I do with my stocks in my portfolio? As you can see here, JKHY is quite a small position in my portfolio of 2.5%. And the reason why this is just a small position is very simple. As you maybe already know when you follow me for a while, normally I buy my businesses, my companies under the intrinsic value and way under the intrinsic value. With JKHY, this is an exception because I like this business model a lot and I wanted to have skin in the game. And so I bought my shares for $157, but just a small position. Because this $157, my buy price, is over the intrinsic value. My calculated intrinsic value is around $125 to $130, around this range. And so I bought over the intrinsic value. This is very unusual for me, but I just like this company and I like this business model because this is a cash machine, a cash flow machine. And I wanted to have at least a small part into it. I stick with the small position, and if JKHY will come back under the intrinsic value, then I will think about to add even more of this great business. And if you're new to my channel, you see here all of the positions in my portfolio, and you find a deeper analysis of all of them, also for JKHY, of course, on my channel. Where I looked into the businesses, into the business models, the financial numbers, and calculated the intrinsic value, and then explained why I bought into these companies. So feel free to check this out, and if you find any value in that, please subscribe to my channel and join me on my road as a long-term value investor. And as I said in the past, Jack Henry was just a super performer over the last decade. This just went up as the profits went up. I don't see that there is an end of that, of this growing profits, and so I bought in, even if I think it's over the intrinsic value right now, because my intrinsic value, as I said, is somewhere around $120 to $130. And also here we can see that Jack Henry was one of the top performers in their industry over the last decade. Maybe I'm a little late, or for sure I'm a little late, but I will stick with this company for the long term because it's just producing cash and cash flows all the time. So that's it for today. Thanks for watching. Please subscribe to my channel if you found any value and follow me on my road to financial freedom. And if you really liked the video, give me a big thumbs up, ring the notification bell, and tell all your friends that here is a community rising of now more than 500 subscribers of long-term value investors. Remember, I'm one of the few YouTubers who give you weekly insight of my real money portfolio and see what I do with my real money and how it works out. So then, see you the next time with another analysis of another stock. For so long, take care, bye bye.